about 1,000-point range, a little bit more than that the Dow has been trading in with here on the day. We've got inside of 35 minutes left in the trading session, so we'll continue to watch that very closely. But as you've been watching here throughout the day, with the NASDAQ having an outsized lead, tech stocks are leading the rebound in today's session. Now, the NASDAQ pushing more than 4% higher right now, just about 4% higher right now, outperforming the other major indices. Joining us now is Erich Reimer, who is the host of Tech Investment Insights at Seeking Alpha. Such a pleasure to have you here with us today, and thanks for taking the time. Why are we seeing such strength in tech here today?
I think at the beginning of the sell-off, we saw everything just collapse and the bottom fall off every sector. But I think we're at the point where investors are looking a lot more carefully at which companies and sectors might be more well-positioned to survive the coronavirus pandemic. So which companies have better cash flows, better cash reserves, their businesses may not be as affected by coronavirus as some other industries, as well as which ones may not be made to accept coercive terms from a government bailout that might be bad for shareholders. And so I think a lot of tech companies are in that category, and definitely today we're seeing that bifurcation increase. I think that when companies like Google, Microsoft, Apple each have over $100 billion in cash reserves, and a lot of people are now at home and using a variety of online services. And so I think that investors are starting to become more particular and specific and not just selling everything.
I'm keeping an eye on a stock screener here and just a heat map of some of the components in the NASDAQ. The ones that are seemingly having the best performance here today are those blue chip names, those larger names like Microsoft, like Facebook. Facebook's up by about 6% here on the day. Amazon, Google, Apple is not necessarily in this conversation. Why is it that Apple isn't seeing, which is one of the most cash-rich companies out there, not seeing the same move higher to the same extent as a Microsoft or an Amazon or Google or even a Facebook right now?
I think it's a variety of factors. There's still the worries about what exactly are the extents of the disruptions in China, where so many Apple factories are based. So even though Apple has, for example, reopened its stores in China, they are still seeing exactly how their factories are getting back online. And furthermore, at the same time they reopen their stores in China, they are closing all their retail stores across the world. And so I think because of that, they're a much more retail direct heavy company. And because of that, there's more concern over the consumer demand side of things. And so it's much more out there in the forefront, in the malls, etc. And so it's a little bit less online than, say, a stock like Facebook is, which is almost entirely based online for its business.
And so after Apple extended their closure and that schedule, which still remains in limbo right now as to how long the stores here in the US and even some stores across Europe now will be closed for, even as we're watching that, is it clear how much they will actually need to cut into that cash pile that they had accumulated over several years now, so that they lessen the blow of what this impact is to their business?
I mean, I think that it's still extremely uncertain. I mean, the fact that we're seeing the lockdowns in Europe and the United States extend much further than perhaps many people initially expected is going to impact a lot of Apple sales, definitely in terms of rolling out new products. I think that, I mean, they already had been experiencing some disruptions even prior in their smartphone cycle, and this definitely adds another level of disruption to it, which is why I think that Apple stock has not been, say, doing as well this past week or the past month as, say, Microsoft stock has, which has a much more institutional business side focus as compared to Apple's heavy consumer demand focus. It's hard to sell smartphones when all the malls are closed, for example.
Right. All right, we're going to come back to Microsoft in a second. Their deep tease for our viewers. Let's go to Uber with some time that we have left here. Uber shares soaring after positive comments from CEO Dara Khosrowshahi saying it has $10 billion in unrestricted cash here. And is Wall Street right now, are they reacting optimistically to Dara's reassurance about liquidity given how big of a ride drop that the company has suffered from to this point in time?
I think it's pretty incredible, but also very much due. I think that at the beginning of the sell-off, people saw Uber as a travel company more than a tech platform company. And even though its rideshare collapsed pretty badly, we saw that its Uber Eats platform has really risen to the challenge. With everyone working from home in lockdown, Uber Eats has been quite busy delivering not only prepared food from restaurants, but also groceries and supplies. And so that's providing a big boost in business. As well as introducing many people in the long run, perhaps, to the concept of getting supplies and food by delivery, as well as Uber Eats. And ironically, a lot of the legal prohibitions against restaurant dine-ins actually have been a unusual boost to business, I think, for platforms like Uber Eats, because now all that dine-in, or at least part of it, is shifted towards just delivery or takeout, which is primarily Uber Eats' position. And I think in terms of liquidity, even before coronavirus, everyone had great worries over Uber's quarterly cash flow and earnings in general. That was always the topic of concern. And so people thought that given this sudden extreme blow to the heart of their business, that the company very well might be forced to engage in very bad lending terms, recapitalization, all those awful things that would destroy the share price. But and so it's definitely shown to be surviving much better than people thought.
Absolutely. Sorry to cut you off. Just want to hear what you were about to say about Microsoft earlier. They are positioned right now seemingly for success, especially with its Teams collaboration tools and the jump that they've seen in users, daily active users, now that so many people are working from home, Eric.
Mm-hmm. I mean, I think that the work from home sort of movement of essentially every potential customer that they could have had out there. I mean, there's some industries that can't work from home, but basically this coronavirus has made it so every company that could have been a potential buyer for Microsoft Enterprise Services is now essentially in a position to try them out. And so we see the same kind of gains in platforms like Slack and other workplace collaboration platforms. And I think that this is going to perhaps cause a surge in current usage for Microsoft and a lot of their enterprise services, but also in terms of perhaps employers in the long term looking more at serious remote working possibilities, and that therefore being a new avenue of business for Microsoft. And so in a great turn of irony, this has actually perhaps been a boost for Microsoft and its enterprise-focused software platforms.
All right, Erich Reimer, who is the host of Tech Investment Insights at Seeking Alpha. Eric, thanks so much for taking the time here today. All right, guys, and coming up next on Cheddar, U.S. Airlines. They are in a tailspin amid slowing travel demand and travel bans related to the coronavirus. We'll discuss what we know about a potential bailout. That's next.